Hello viewers, welcome to my channel, Sensor 360 Investor, where we use best practices from the companies we invest in from around the world and apply those to the investing process in order to create a methodology and framework. And within that framework today, we're going to focus in on the trader segment. And we're going to continue the quant trading, know your numbers, know your data, mini series. And hopefully we can conclude that here today. Before we begin, a quick word about the disclaimer. This channel is not providing financial advice. Please pause, read, and then continue. Okay, so without much further ado, let's begin the show. All right, so this is a continuation of the quant discussion, and today we're going to kind of use some of these and end up with how to kind of get a list of stocks within your watch list. And if you haven't seen the earlier videos in the series, I would recommend that you start with this one, Investing Starts Learn from watching FIFA World Cup, because that will set up the background and context to some of the material in this video. Okay, a very quick summary of, so these were the countries for the FIFA World Cup. These were the countries that were kind of shortlisted as to where the potential winners will come from. Italy didn't qualify, so they were excluded, but so these are the countries that were picked as potential winners. Okay, so just quick, we'll just run through this quickly. So there were 32 teams, and the Quant Cup was the teams were listed in the previous video. So, and then as the tournament proceeded, we can see which of these teams made a move all the way to the final, and the final was won by Argentina. And if you look at the finalists and the major runs actually came from pretty much the flag teams on the other team. So the outsiders were Croatia, Morocco, and Portugal that made it to the round of 8. And Croatia and Morocco also made it to the round of 4. So these were the two outsiders. Okay, so basically, how did we get to that, and how can we use that for picking stocks? So first of all, you got to look at historical performance. We looked at historical performance of all the teams, and these were the teams and the number of currencies that they had qualified for the finals. And as you can see, Brazil has qualified 22 times, Germany 20, Argentina 18, Italy 18, France 16, England 16, and Spain 16. So these are the ones that pretty much qualify the majority of the times. And so therefore, just by being able to turn up at the finals, they have the greater chance of winning the World Cup. If you can't qualify, obviously you have no chance of winning the World Cup. And then you looked at recent performance. So this was the run. So FIFA has a scoring system where every time teams play each other, depending on where they are on the FIFA rankings, they get a certain amount of scores. And we can see that Brazil is the number 1 ranked team, followed by Belgium, Argentina, France, England, Italy, Spain, Netherlands. And so again, this can be taken into consideration when we look at more recent performance, because historical performance may not be as good because it can get outdated further back you go. Which is why we also need to look at current performance. And in terms of current performance, we could look at betting odds and pundits and experts, just like analyst sentiments and sentiment on stocks, what the analyst ratings are. So based on the ratings, then the projected winner was Brazil, with the Brazil versus France final. As it turned out, France did make the final, but on this side of the bracket, Brazil did not. And there was a Netherlands-Argentina match. Argentina won that, so Netherlands didn't go through. Germany failed to qualify out of the group rounds. Portugal actually moved forward. So some of this was on point. Some of this was a little bit off. And in terms of performance, so 5 to 10 year performance in stocks, you can look at 5 to 10 year performance for your historical, and then for your more recent performance, you can bring that down to 3 to 5 year window. And for your current performance, you can look at anywhere between 6 months, really, up to 1 year, but out to 2 years. So So these are the windows you want to look at in terms of weighting your final choices when you're making your final selections in your stocks. All right, so quant stock selection. So here's a race card, and so even in horse racing, they do something very similar where they look at the horse, they look at the course, they look at the jockey, they look at the length of the course, the type of the turf, is if it's a steeplechase or whatever, what the horse's performances in the last outings were, where they positioned, and based on all of that, the bookies make the odds, and you can place your bets. And the trick with horse racing is you have to find the a discrepancy in the odds early on before the public starts to bet, and then the bookies can see where the money's going, and they'll adjust the odds as you get close to the race. So you have to be able to pick earlier than later. And then there are several quants already available to us in the world of stocks. So Morningstar ratings, they have a 5-star rating. S&P stars also have a 5-star rating. So 5 being the best, 1 being the worst. Foolish caps for more your smaller momentum type of stocks. They have like the caps rating. Investors Business Daily also has a rating with their doctor stocks and their stock checkup, where they give you a letter grade like an A, B, C ranking, A plus being the best. And then within Sensor 360, we also have a quants rating, which is the ABBA rating that we use. And you can use these, but the only problem with most of these, certainly for the Morningstar ratings, is they're a bit more historic and based. So the most current performance doesn't really move the ratings a lot. So you just have to be a little bit careful, and you need to add more current performance on top of these just to kind of get a better quality rating out of them. Investors Business Daily, which is focused on shorter term momentum stocks, is a bit more current. So it's almost like you can marry this and this together. You may come up with a better system. Okay, so quants for long term and short term. Where you can focus is 3 areas: earnings momentum, because eventually that's what drives price. So a stock that's posting earnings growth and then able to post a higher growth quarter over quarter over quarter will eventually lead to a higher price in the stock. And then usually before the earnings momentum kicks in, there's an earnings surprise, some kind of catalyst, either a major outperformance in the earnings report, or some kind of acquisition or industry event that takes place that now re-rates that stock, and then that then is the precursor to an earnings momentum run, and then a price run. And then also just look at pure momentum, which is based on price. There's 2, I think, factors to look at here. One is the relative performance, which is how is it doing relative to its peers, its industry benchmark, the S&P 500, and the overall, just generally the overall market. But you also want to take a look at absolute performance, because relative performance could be good, and it could be good also in a down market. Absolute performance, you want to look at where it's actually showing you performance to the upside. So you want to marry these two together. All right, so if we did that, let's take a look at some screens that popped up as I ran this today. And so the first one is, so this is a screen, this is just based on the momentum, earnings momentum. And this one is based on so this one is based on annual earnings. So that gives you a 1-year picture. So these are the stocks with the best earnings on a year picture. And then this one's a little bit more current because this is trailing 4 quarters of earnings. So it picks up a little bit more recent activity over this one. But certainly most of these will be the same. You can see Vista and MRO. And then you got Calm up here. We don't have Calm here. USOI here. So a couple of new ones come into the frame. So it gives you a better selection. And then on the momentum side, price momentum side, we can take a look at year-to-date performance. So these were the stocks with the best price momentum. And then also you can look at relative performance. So year-to-date this can be a proxy for absolute, because it's going to tell you what the performance is on its own merit. And this is based on relative performance, how it's over a 1 year period, how it's relating to the performance of the S&P 500. So with just, I mean, there's a few more screens that you can cut out of this as well, but for illustration, I just leave it at a couple of momentum ones, a couple of earnings ones. And then from here, you can start to pick, almost make two lists, one from this side, one from this side, and then see if there's any overlap on a Venn diagram basis, and maybe you focus in on those, or you just treat the two sets of data differently, and then you pick one from this set, one from this set to make your short list, and you can then go and trade those. So like if you know, obviously if you look at this one here, year-to-date performance, these are pretty good price runs, especially in a a market, in a bear market that we've had this year. Okay, so it's useful to look at quantum data and metrics and stuff like that to identify mathematically or statistically what stocks may be good for selection. And especially if you tie it back to earnings momentum, you're bringing in fundamental data into the equation, not just price action. But that certainly is one way to build a list, and a very good list at that. If so, well, as we close out, if you haven't subscribed, if I can ask you to subscribe, that would be great. If you like this video, please give it a thumbs up, share with your family and friends. If you're inclined to leave a comment with your thoughts, and I will see you on the next video. Thanks for watching, thanks for listening, and goodbye.